The comments on this channel are solely my personal opinions. These opinions may not align with your financial situation or risk profile. Therefore, under no circumstances should you make investment decisions based solely on the information and comments provided on my channel. Last night, Trump took the oath and officially began his term. Many questions have come in about what lies ahead in the post-Trump era, particularly regarding what might happen in the financial markets under this new world order. I will try to address these questions as best I can. Donald Trump, the 47th President of the United States, took the oath of office last night, marking the official start of his presidency. He hit the ground running, signing 7 executive orders right away. But to understand this moment, we need to go back to the election campaign. Why was Trump elected in the United States? The number one reason is the economy. High inflation and significantly reduced purchasing power were major issues. The American people, remembering Trump's economic achievements during his previous presidency, elected him to reduce inflation, restore purchasing power, and normalize the economy. While there were many other reasons, the economy was the top priority for American voters. During the campaign, Trump made numerous promises. His most notable stance for the markets was his remarks on cryptocurrency. He frequently declared that while China was a hub for cryptocurrency, he intended to make the U.S. a global center for this industry, offering significant support. There's a huge market at play, and Trump aimed to ensure America secured the largest share. Cryptocurrency investors were a major force supporting Trump's victory, even in countries like Turkey. Following his win, Trump surprised everyone over the weekend by launching 2 meme coins, Trump Coin and Melon Coin, named after himself and his wife. This unexpected move generated substantial buzz. Within 24 hours, Trump Coin reached a market cap of $14 billion, providing significant returns to investors and creating a wave of new millionaires. However, after the initial surge to $30, the price fell back to $7. Despite this decline, the dramatic increase and the profits gained in such a short period remain noteworthy. Looking at those who surrounded Trump during the inauguration ceremony, the front row was filled with the owners of the world's largest tech and finance companies, followed by his cabinet members. This lineup showcased how Trump has aligned himself with major capital and technology players. In this new term, Trump appears to have the support of significant financial, technological, and social media resources, preparing to wield substantial power globally. For investment markets, there are 2 key milestones to watch: the first 100 days and the second year of his presidency. Why the first 100 days? Because Trump follows the 100-day rule, where he prioritizes key promises from his campaign. Why the second year? Midterm elections in the U.S. will test whether he can maintain public support based on his achievements over this period. Both will be crucial moments in assessing his presidency. It's essential to highlight that the global and U.S. economies during Trump's previous presidency are not the same as today. Geopolitical tensions and economic crises have created a challenging landscape. A major question is whether the Federal Reserve (Fed) will adjust its policies under Trump's leadership. Currently, the Fed is in a rate-cutting cycle but may pause rate changes soon. Trump has a well-known aversion to high interest rates, so he may push for a downward trend. In international markets, the strength of the dollar continues, fluctuating between the 188 to 109 range. However, Trump prefers a weaker dollar, as a strong dollar can reduce U.S. competitiveness and encourage investments in alternative currencies. By the end of 2025, I expect the dollar index to fall below 100, potentially reaching levels as low as 92. Key developments like U.S.-China trade tensions and new tariffs on European goods will unfold gradually over time. Trump's vision for cryptocurrency markets is clear, and his support has brought significant changes. Bitcoin, for example, continues to exhibit wide price fluctuations, moving between $100,000 and $109,500 recently. Investors should be cautious of high volatility and potential market manipulation in 2025. Although there's potential for significant gains, such as Bitcoin reaching $120,000 or $140,000, the downside risks are substantial, with possible drops to $85,000. In traditional markets, the euro is currently at 1.0425, having rebounded after a sharp drop last week. Gold is another focal point, with prices at $2,744. While it may test resistance levels at $2,760 or $2,780, I still consider anything above $2,720 as overpriced. My target remains $2,600, where I plan to re-enter the market. In summary, for cryptocurrency investors, 2025 will be a year of caution. Those who diversify their risks and avoid over-leveraging will fare better. However, those who invest all their assets or engage in risky leverage trading are likely to face significant losses. Long-term investors with a diversified approach are less at risk. Thank you for listening.